Well, the market is in free fall today. The S&P 500 is down almost 4%. The NASDAQ is down over 5%. Really, really brutal sell-off after yesterday's rally. So we did have a downward bias in the portfolio. You know, a lot of these positions that we're in, we have profits in. So I went ahead and I took some stuff off today. First thing I did here with the GameStop. So we put on this this bear put vertical. You can see GameStop is dropping today. This is the daily chart. It's down about 8.4%. So with the GameStop, all right. So GME, I closed out half the position of this bear vertical. So we went ahead and so right here I bought back the May 20 puts, 117 strike price. Bought them back for $9.53 today. We paid. We sold them for $6.58. I had to buy them back for $9.53. But then on the other side, we had bought the puts. These are the 122 May 20 expiration. Bought them for $8.49 and sold them for $12.50 today. So that represents about a 54% return. So here is FSLY. I had bought puts, went long the puts here. You can see that this is the daily chart. So today the stock is really coming down. It's down about 20%. Kind of a broken chart. So I had to take profits on this. Today I closed out the long puts. So we had bought these contracts. It was the June 17th expiration, $18 strike price. We paid $2.76. And today I unwound half of them for $4.50 and the other half for $4.70. So that represents a gain of about 63% on the first batch and about 70% on the second batch. Texas Instruments, I put the bear put vertical on this. Not really working out too well. This is the weekly chart. You can see it had an okay week. It's down today, but I closed them out. They were getting a little long in the tooth. So we had sold the May 20 puts, 152.50 strike price for $2.31, and I had to I bought them back today at 105, and then we had bought the May 20 160 strikes for $4.06, and I had to buy them back today. I had to sell them today at $2.19. So I took a small loss on the trade. It's about a 35% negative return on the money that we put at risk. This is First Republic Bank, San Francisco, FRC. I went long the puts here. It's been having a rough time. This is the weekly chart, so the past couple of weeks it's been down. So I decided to take some profits today. So if we take a look at FRC, what did I do here? So this is the top two here. So FRC, I had bought the June 17th puts, $160 strike price for $7.90. And I went ahead and I sold them in two batches. I already took off half on the 26th of April. So today I closed it out. I sold the second batch for $15.30, and that represents about a 93.7% return on that trade. Here's Lowe's. This was a bear call spread, and I closed it out. We're in profits. They were getting a little long in the tooth. The expiration was coming up. So this is what I did. I had sold the May 6th. That's expiration for tomorrow. So I sold the May 6th, 210 strike price for 90 cents, and I bought the May 6th, 212.50 strike price for 58 cents. So there was a spread there. I made about 13% on the trade. So this is Intuit. The TurboTax people having a really rough time today. I think there was a ruling last night that went against them, that they couldn't advertise free tax returns or something like that. I heard it in the periphery. I wasn't really following the story all that well, but I do know this, that the stock is down almost 10% today. So we were long the puts. I went ahead and I closed this position. All right, so Intuit, we had taken half off on the 26th of April. Today we closed out the position and we sold the remaining half. So we had originally bought these puts. These were the July 15th puts, $450 strike price. I paid $31.35, and today I sold them for $56.50. That represents about an 80% return with the money that I had put at risk. All right, this is PVH Corp. I went long the puts here. You can see on the weekly chart, it's had a couple, let's call it 3 weeks. It's been in a downtrend, so that works in our favor. All right, so what I did, we had sold half the position on the 26th. Today I took the remaining 50% that we had in play, and I went and took profits. So we had bought these puts. These are the June 17th $70 strike price. We paid $3.50. Today I sold them for $6.60. That represents an 85% return on the money that we had put at risk. This is Wix. This is the weekly chart. You can see came up here to retest. This is the 20-week and kind of failed, broke down. We had profits, so I ended up taking them. All right, so we had taken half off on the 27th, and then today we closed out the remaining position. So we had bought the July 15th puts, $85 strike price. We paid $10.80, and today I sold them for $16.70. That represents about a 55% return on our money that we put at risk. All right, so this is Oak Street Health, ticker symbol OSH. We were long puts. It's having a rough day today. It's down almost 10%. So I went ahead and I took some profits. Okay, so we had previously sold half the position on the 26th. Today I closed out the position in its entirety. We had bought July 15th puts, $20 strike price. We paid $2.32. Today I sold them for $4.10. That represents about a 77% return on the money that we put at risk. All right, some new positions. I went ahead and I bought puts on Bumble Inc., BNBL. The stock has been in the downtrend. This is the daily, so it's 20 days trading below its 50-day. They're both trending lower. Yesterday it came up. It hit its 20-day, and today it just broke down. It's down about 11%. I had wrote puts on this earlier, so let's see where we're at. Okay, so Bumble, I bought the May 20 puts, $22.50 strike price. I paid $2.35. They're not trading at $2.68, call it. So I got about a 14% return in this trade, which is good. I have to increase. You'll see with the portfolio, I'm taking a lot of profits on all the downward bias positions that it's actually throwing off my allocation of the portfolio. And I'll show you later, but it's I feel like we're just I want to get more. I gotta wait for another setup to take more downside bias positions in, because a lot of stocks are just way oversold. You know, I've positioned now for some type of rebound, some type of relief rally, and then once I get the signals, I'll start building up the short positions or the downside bias positions again. This is Walmart. I did a bull call vertical on this. So Walmart was on my watch list for a while. Right around here, it broke out. This was the level here of resistance, and it broke out pretty good here. And I wanted to see it come up and see if it came back and retest. So right now it's, let me annotate this. All right, so if I draw a horizontal line right here, like this, let's make this black, okay, like that, so we can see it. So you can see this was resistance, came down, broke out here in a big way, ran up, came back down, and then it appears that this 150 level, which was prior resistance, is now new support. So I went ahead and I did a bull call vertical on this one, anticipating that the stock is going to get a bounce from here. We'll see. So today I sold the July 15th calls, $160 strike price for $3.36, and I went ahead and I bought the July 15th calls, $155 strike price for $5.42. Getting that vertical in there. I'm off a little bit on the trade now, but I think Walmart looks good. All right, here's a trade I did this morning. Anthem has held up really well through this entire year. I mean, the market's been miserable, but this uptrend remains intact. It kind of faltered a little bit here over the past couple of weeks, but that said, it came down. It tested its 20-day, which is above its 50-day, and it had a good day yesterday. It's hanging tough today. I mean, the market's down huge, and this is it's only down 0.3%. So I'm anticipating that Anthem is going to continue its trend higher. So I did a bull call vertical on this. So what I did here was I sold the September 16th 530 calls. Sold them for $28.29, and I bought the September 16th 520 calls for $32.90. And you can see even in this down market that the trade is working out. I'm up now. I'm up about 12% in the trade or so. Okay, this is Cigna CI. Again, stock has been in an uptrend through this poor market, so I like this relative strength. I saw it come down over the past couple of days, hit its 50-day, and then bounced up pretty hard yesterday. Today, it's hanging tough in a really, really bad market. This thing is down 0.5%. So I'm liking this to the upside. It's got really good relative strength. All right. So the bull vertical spread here, I sold the July 15th 270 strike for $7.16, and I went ahead and I bought the July 15 260 strikes for $11.24. And I'm off a little bit in the trade, but again, I like the relative strength of this name. It's, the CI, the Anthem. I have a lot of healthcare names in here, and they seem to be working out. My long bias is really way more towards energy names and healthcare names right now, and that's where the strength is. These General Dynamics, also, with the Lockheed and the General Dynamics. I do have also an upward bias towards the defense companies. You could look at this chart. The market has been really miserable. This thing has held up pretty well. It faltered over the past couple of days, but for the most part, it hit its 50-day yesterday, bounced off aggressively. Today, it's down 0.4% in a really, really bad market. I would say that this has the good relative strength. If I were to take an upward bias in anything, I want to take it in names that are holding up pretty well in a weak market, right? So let's take a look at what we did with GD. GD, we got, I sold the June 24 calls to $250 strike price for $5.77, and I went ahead and I bought the June 24 calls $245 strike price for $7.88. And we're down a little bit in the trade, but I am anticipating that this thing is going to be trading north of, call it 247 or so, relatively quickly. This is Packaging Corporation of America, PKG. Really strong chart here. It's so it gapped up, came down, and retested. This would have been a great buying opportunity here. I didn't get it on my list, but it's following its uptrend. It's 20. This is the daily chart. It's 20-day and it's 50-day trending up, solid. You can see today, it's down 1.5% today, but in the end, this held up really well through all this market turbulence. So I'm anticipating this thing is going to bounce off the 20-day and then hit higher. All right. So what we did here with the bull vertical, the bull call vertical spread that we put on, I had sold the July 15s. $170 strike price for $4.60, and I went ahead and I bought the July 15th 165 calls for $6.90, off a little bit in the trade here, but again, I like the chart. All right, last one for today. This one I regret doing. I'm gonna wait and see, but I put on the bull call vertical this morning, so I saw the company come up. It's been stellar. Through this entire downturn, it's been in an uptrend. Dropped a little bit, I saw it this morning. It kind of, a couple of days ago, it hit its 50-day, seemed to be bouncing off of it. I was like, this thing's going to find some support here and maybe head higher. I had no idea the stock was going to be dropping by 9% today, so I don't know. I'm going to give it another day or two, and if this looks even worse, maybe tomorrow, I might just exit the trade. This is just a poor trade. So let's see what kind of damage I did. All right. New core. Lousy trade. I fucked up. All right, so I sold the July 15th calls, $160 strike price for $8.90. And I went ahead and I bought the July 15th calls, $155 strike price for $10.91. You can see this thing has just completely gone against me. As soon as I put it on, I saw that maybe I messed up here. So I'm down like 32% on the trade right out of the gate. I'm gonna wait and see how this thing does tomorrow. I don't know, pretty nasty sell-off today. Okay, so here's where we're at. With this market sell-off and given the downward bias that we had in the portfolio, I really had to take some of those profits. We had some really good returns, and I took them off. Now, what this did for the portfolio structures, you see now I have 56% upward bias, only 30% downward bias remaining, and 14% neutral. So I am really now heavily weighted to the upside, which makes me a little unhappy, only because the market has been in a serious downtrend. But if we do get some type of bounce, if today is a washout day and maybe we get some strength going into the remaining days of the month or the rest of the month, this could work in my favor. If not, I'm going to have to go ahead and readdress my structure of the portfolio and try to look for more downward bias ideas. The problem is that all the downward bias names that I'm getting have already come down so far, you know. So I don't want to be taking new downward bias positions on names that are just completely oversold. So I might just have to wait this out, wait for some type of small rally to come in. I'll be able to unwind some of the upward bias trades, and then I'll be able to reestablish the downward bias trades. So it's worked out so far. This could end up hurting me, given where my bias is. I don't have enough downward bias, but I didn't have any choice. I had positions that were up 80, 90%, and I have to take those profits, you know. So we'll see what the next days bring. If I have to reestablish and increase my downward bias, I'll try to find some names that make sense. But this is the current portfolio structure. All right, good luck. Looks like we're trading near the lows of the day, so really, really lousy day. Have a good day.